Hello everyone, it's my first time on the stream, and what we're going to do today, this week, these weeks are just going too fast. Thursday, 28th of November, 9:18 a.m. my time, and so we're going into Asian session on London time, GMT. So what we're going to do is we will go over some of the predicaments of this week. I know Jordan and Mr. Dan have been. I'm just going through this quickly. I've been plotting a few moves on the gold exchange from Sunday evening. Okay, from Sunday evening. Let's just go to the desktop. Let's just open up what we have in store and what we've seen thus far in the week. What I was personally looking at, my friends, and I put this into one of the videos that I uploaded on the Monday morning. And I was just waiting for gold more or less to play out into Wednesday, Thursday to give us that accumulation of its next move, i.e. orders, and go from there. So what we've seen, these here guys, I just went along, I did some work on the Sunday, and I've just put into perspective the weekly open, weekly closure. As you can see, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. And I was just going in and I was looking at the new average weekly ranges. So if we look at the weekly open just here and the move to the downside, that's 1,470 pips. If we then once more go from the upside to downside on this week, is 980s, and also from the open up to the high right here, that's 1,500 shy of. So currently at the minute, we can look at gold every month on month. I would say quarter on quarter, gold right now is actually improving. We could say it's an improvement, having more liquidity and volume in the market. Why is it an improvement? Because we could just more or less focus on one or two instruments rather than trying to range our broad, perspective, data-wise, technical-wise, on a range of instruments. When at the moment, if you look at the gold market and how it's utilized, and this is kind of perfect movement. Look at that downside push, 900, 950s, 980 pips. In one flush move. That was more or less in one day. We've seen this just here as well. If we look at the Monday open, okay, starting on the 11th of November, that's a 750 pips there. Another flush move on a day. That was a 2-day perspective here on the Wednesday and the Thursday. Just over 830s, 840s. So what we're seeing right now in gold is not just a high accumulation of volume and orders come through, day by day, more so week by week, as you can see over here with a formula, very, very simple context of drawing, time zones, timings, open, closes, some of the highs and lows being reached, slowly breached before the market does pull back. And if we look into the intertwinement of Monday this week, that's just shy of 1,000 pips, guys. This hasn't really been seen before. If we look historically, when we're looking at intra-session and intraday modules of the gold market and the thesis and the overall range of how far it's playing out and how fluid, not liquid, fluid. And what I mean by fluid is there's not much crazy ranging going on. When gold is deciding to move from point A to point B, it's quite straightforward, it's quite flush, which also gives us the opportunity to mark down our correspondence with data, and also mainly technically in this case to hold these trades for a higher predicament overall. And it's not been hard to do so given the factors of, if we look over here as an example, okay, the Monday open, we smash through Friday, that's Friday's low there, we smash through Friday's low, we start to trail, and then what we do, we also smash through the low of the Thursday and the Wednesday. So Wednesday low, Thursday low. As you can see here, once we're breaking through these arenas and these points of call, we can see the volume is just pushed once more again, and it's very, very easy right now to just overview and look at these highs and lows these are daily highs and lows, and we just keep on pushing. We can keep on trailing some of these orders to maximize our pip return, and so on and so forth. If you just look at the weekly open, weekly close to the daily highs and the daily lows, you can see here that the market is running at a very nice fluid pace. Let's look at the current potential of gold right now. if you look at the daily module and landscape, it can be, if I just remove, okay, let's just take some of the eyesore off. If we look at this, the interior speaks a small volume of, 1 second, Jordan, are you still there?
I am. Can you hear me?
Yeah, am I still going? I'm not cutting off or anything, right?
Yeah, no, that's fine. Can you just check that? Is my screen sharing if I put up my trading view, for example? It should be exclusive to you, the screen share. Just confirm so that you can only see yours.
I can only see mine. I might have to cut mine off in a minute.
Perfect.
Let me just finalize this.
Yeah,
Give me 1 minute. I'll switch
yeah,
out.
no, that's fine. Keep doing what you're doing.
All right, sweet. So, guys, on the daily time frame, this is quite important. Why? Because what we can clearly see here is we got from A to B of huge market move, and what we're looking for is there indecisive reactions in between, let's say, to yesterday's candle previously. We've come into the 50% volume area right now. If you guys have been following us for a long time, you know this is a very prolific, simple area of context. And what we can clearly see is that we've actually spiked through that, and we're now renegotiating with the volume from mid-range to lower range of the daily closure. So with that being said, are we going to more or less have an impact in between points 2,627 to 2,647? Okay, that's a 200 pip module, A and B, A, B, A, B. Or will we actually start to break down these areas? Can you see the date where the daily low is right here? If we start to break below that, then we will see, and again, if I take some of this off the chart, we will see the market fluctuate anywhere in between 2,577 and also 2,600s. I feel anywhere in between this area, I would say 2,580s could be a higher impact target potential for the gold market to fluctuate into. Now, if we go back to the 90-minute time frame, okay, let me put some of these areas back on. As you can see, nice and clean cut there. We can see some of the daily low here are 2.6s. I'm surprised it didn't actually meet 2.6 to a very, very pinpoint precise predicament. However, what we can maybe potentially see, can you see we have push 1, push 2, do we get push 3? And if we go in and we can just measure, if we just measure the small area, copy paste, will we now see from the high over here, will we now see a point of call flood and push us lower than the low of the week already? Let's see if the gold market will remain below 2,650s, 2,660s. But as I said here, I just did quote on the daily time frame, 2,647 is that 50% volume on the daily. Transition into the 90-minute. If we sustain and start to stabilize below here, we will in fact take out these areas, guys. And who's not to say that even the weekly low in between the 8th of November to the 17th, what's this one, 2,535 there, we could maybe even step volumes around into this area technically as well. Does that make sense, Jordan?
Absolutely. I would say right now, technically and fundamentally, we're lining up. So, the markets are quite clearly reacting to a lot of fundamental information that are coming out right now in terms of ceasefires, some of the global conflicts that are going on, but also from a liquidity standpoint. So we touched on the fact that we had the inverted correlation return between DXY and gold, for example. So we've actually touched into the 108 pretty much on the DXY. And we've also seen a pullback on gold, which is a positive correlation in terms of what we've seen from gold pumping and the DXY pumping. So if we look, let me just pull up my daily. I can screen share, but we have.
Yeah, screen share. I've turned mine off now. You can do yours.
Okay, let me just let me screen share myself, and we're very much in line right now with what we are saying. Bear with me. Screen share 1. These charts as well. So Sean's is, for the record, technically Sean is much more inept. or adapted to this. So I just want to show this again, very much the same picture. So I've been pulling up these levels for a number of months now.
I can see your screen
this
now.
zone here. So I would say I'm looking at this as a magnetic zone of 2575. But what I wanted to touch on was the DXY as well. So we've had this. If we look on the weekly, I much prefer. This is my main range, which we've been in from 2 years, effectively, from November 22. We did have this spike into highs that have taken out the 2-year highs effectively. We're now pulling back in, which is
Joe. We can't. How can we see yours? I can't see it.
So can you not see mine? Again, guys, apologies for this. This
I can, but you need to put the chart. Put the chart up. Put the chart up.
Can you see this now? No. Can you see Discord only?
Yeah. Close the Discord.
Bear with me.
There we go.
That's
it.
Sorry. Okay. No, I was.
There we go.
Okay, so you can see this, guys, right?
Yeah.
So I've had these levels marked on for a while, and I'm going to touch again, for the record, Sean, very technically based and, fundamentally myself, and they do align very well right now. So let me just pull up DXY again. So I've discussed this a number of times in the previous spaces, in my text contributions into the channel. So we've been in this range from, literally November 2022, right? So we've been trading in this range. Dollar, we've spoken about this. So this push was prior to the election, but the main push has been based on the optimism around the quote-unquote Trump trade. It was very much expected. We've pushed into these highs here, taken out the 2-year high very slightly, albeit. We pulled back into here. So what we've had regarding, and it's not as simple as saying, okay, DXY is going up, gold's going down, vice versa. It's really not like that. But you have to picture liquidity in markets. So let me just pull up the top 5, charts we're looking at. There is no chart with S&P 500. This is just rocketing. And again, I've touched on this. I don't want to really go over this again and again and again. If you need to, go have a look at the presentation that I've put into a PDF form for you guys in the Spaces channel. And the Spaces recordings, BTC, we don't need to touch on. Very much US 30, S&P, same picture. So really it's the focus on DXY and gold right now. So gold has been heavily reacting to technical levels, which Sean has just mapped out, but also fundamentals that are going on right now. So again, without touching and digging up old graves, we have the global conflict that's going on right now. Is it enough really to be pushing gold into these highs? Not really, in my opinion. So, again, we've stated these levels a number of times. From a daily standpoint, if we really want to go and look at weekly, very much the same picture, in my opinion. So for the time being, I would expect, again, trend lines, not a huge fan of, but if we do really zoom out and have a look, it has adhered to this for a long time. So to break this, in my opinion, it would be a optimistic global standpoint right now. So realistically, we're looking at this 2600 and coming back down into 2575, which I do think is on the horizon. Fundamentally, we've had some optimistic news. I know, we discussed in the group today, FOMC, the minutes released were basically just an overview and a recap of the Federal Reserve meeting back in November. In my opinion, nothing has really changed. The overall economic outlook from the USA is positive on paper. Again, we can go further down that rabbit hole. I can give you guys my 2 cents on what I think is really going on. But yeah, on face value, nothing has really changed unless we get some concerning data or erratic data coming out of the USA in terms of employment, etc., inflation, GDP. Very much the same as what is going on. So I think really gold has probably topped out here. If we look from a technical standpoint, again, Sean will always give you guys a better, thesis on this. But in my personal opinion and our opinion, I don't see any major drag to the highs unless we do see a major escalation right now in terms of Russia, Ukraine. We know that Israel, Lebanon, Israel-Palestine, different story, but Israel-Lebanon seems to have cooled down for 60 days, which coincides with Trump actually entering the White House. And again, Sean, throw your opinion in on this. We don't really want to cross too many wires here. There's a lot of moving parts going on right now. But I would say from a global conflict standpoint, there's a lot of, how to phrase this, there's a lot of alarmism going on right now. You see a lot of
it's just
a lot of major sources screaming World War III, etc. But how many times have we heard this throughout the last 3 to 4 years in particular? I think there's a lot of posturing going on right now politically, militarily. In my opinion, it's not a real cause for concern, but if we want to translate this into the charts, it would take, in my opinion, a lot to start pushing gold up into the 2,800, 3,000 region, to be quite honest.
Yeah, I would also just like to throw in there, we're coming into, obviously we've had elections this time of, and we're also coming into the end of November now, and going into obviously December, into holiday season, quote unquote. More or less the market is kind of finished in the next 2 weeks, I would say mid-December, right? So we're kind of coming into the end of year. We've had a lot going on with obviously Middle East.
We have Thanksgiving as well, sorry to cut in, but this weekend is Thanksgiving, so the volume in the markets is bound to be down. And
we say that, but like
ahead of the holiday season.
When you're looking at volume, look what I've just read out on the gold. It's doing 800 pip days. So even if the volume does drop, so it's doing 400s, there's still a lot of volume there to potentially manage.
On the table for sure,
yeah. Manipulation, and also the manipulation will come in obviously today and tomorrow because it's going to be closing up this month. But at the same time, I feel like even just looking at this graph in front on this daily time frame with gold, as I just mentioned, there's arenas of volume on the lower. What I'm also going to do, guys, I'm just waiting for a Windows computer so I can put the ATAS trading platform on there. So it's Windows only. And my recording on my Mega machine isn't too good because the screens are just so gigantic. So once I've got ATAS and the trading footprint, I'm going to start to bring that into 2025 to show you guys what I've learned, what goes on the upper echelon of trading view, so to speak, and also how to read slowly some market orders from the COMEX platform and the data feed, which is the upper echelon of trading out of retail. So I'm going to bring that to the table soon. Hopefully by the end of December, I'll start to slowly just show you guys. I'll drip feed it in, and I've got some guys really interested right now on taking it to a deeper level. And that's going to also open people's minds into what data the majority of traders, retail, Instagram kids, what they cannot see, and where the real information, so to speak, a large volume of the information actually derives from, other than candlesticks and other than reading news outlets and putting data together, etc. There's another bridge here as well, which I'm going to start to put on the table and just open some people's minds towards, which I think is going to be a good start and foundational layer into 2025. Depends how serious you want to go as, on your market venture, so to speak. But overall, George, see that dollar index? What do you think this is going to do next? Because it's been sideways for quite some time. If this just starts to rebound, if this rebounds at this level and continues the upside, do you not think it can take out 110?
Absolutely, but if we were to put this into context here, so this here is very much based on the quantitative easing that was pumped into the market, aka the helicopter money on the back of COVID.
End of COVID, right?
Back into the markets.
Yeah.
So I would say, like, when we get such a strong range like this, which has been based over 2 years, okay, we can call this consolidation, but we could also call this normality-ish, or returning to normality, because this is very much this was a major event, right? When you're pumping liquidity, I'll call it helicopter money and stimulus, effectively. So what we have going on right now is actually the opposite of quantitative easing, is quantitative tapering. So the Fed are actually, offloading liquidity effectively from their balance sheets. So it's very interesting. And I would say, as much as, you know, we've seen gold as a safe haven, that's the reason we've seen it pumping, is largely due to uncertainty. I would argue that the dollar is as much of a safe haven as you know, as gold is, for example, whether that's ETFs or, you know, physical hoarding of gold, and that will remain the case until a replacement comes into the frame. So, you know, we have a lot of conversation in the group regarding BRICS and alternative reserve currencies, but it's a long way off in my opinion. So to answer your question, it's not surprised me that we've dipped back above this level on the, you know, with the Trump trade, quote unquote. I don't want to keep using that term, but it's relative right now. So it wouldn't surprise me if we do start trading back into these levels, especially with the US involvement in the conflict that's going on right now. But as I say, it's not as simple as, okay, DXY is coming down, that means gold's going to rally. It's really not the case. So, you know, I mean, let's just go and have a look at S&P. It's just touching all-time highs. US 30 touching all-time highs. It's BTC touching all-time highs. So it's really not as simple as that. You have to consider the markets in terms of liquidity and, you know, liquidity flow. Everything can't pump at the same time. Something has to give. I touched on this last Friday in the group, and I said the chances of, you know, everything continuing to pump, very slim, in fact, pretty much impossible. So, you know, there's a lot of moving parts right now, and gold is very interesting. This is a reason we all love to trade this. But just to touch on the point that Sean made, we have a trifecta. We have the fundamentals, technicals, and volume into markets. And this is really what we want to start ingraining into you guys. If we turn up every day and we're just changing our thesis based on a small data release or a culmination of data releases, then to be quite honest with you guys, you're probably not going to see long-term success in these markets. It's a case of building up an idea. You know, let me just show you oil quickly. I went over this probably 6 weeks ago, maybe even a month ago. I've not changed my levels for a very long time. And it's interesting how we keep coming back into this area of contention. Look at this indecision right now. Like, we have a median price on oil, as I've said, for, again, we don't need to go too deep. As an example, extraction prices, sale prices, etc., etc. We have to start forming an idea over a longer period of time, be it 3 months, 6 months, 12 months. So there was a reason gold rallied for all this time. It's not just gone up because people think, okay, gold's going up, let's just keep it. If there's a reason for gold, okay, we had this slight alteration here, otherwise we followed this trend. Why? A lot of it really was based on the disparity in wealth created by COVID. And this is only a local trend. I say local from October 23, so pretty much a year ago. But if we zoom out again, gold's been going up. Why? We have to ask ourselves these questions. So when people start saying, "Oh, gold's going to break down to this downside," why? What's the catalyst? Like, if you turn up every day and you're looking on hourly time frames, 4-hour time frames, and you expect to find opportunities and not have to adapt, this is the reason I put such importance on staying on top of things. Because if we just go on to a smaller time frame on gold today, I can point to exactly what's happened from the top. So here we had a rally for obvious reasons, conflict, etc., indecision in elections. Look, it's pretty much as soon as the elections were done, I've stated numerous times that I was in from around 27:30. So this thing, 26:30. That was pretty much the election finale, right? We've come down, and then we've had this consolidation. I didn't want to move that level, it's okay. We've had this consolidation, and then we've had a few things happen, right? So we've had an escalation. This pretty much, we were all in this trade down to the bottom, and then Sean posted this in a detailed video. We had the escalation, we've had numerous things go on with Russia and Ukraine. We've had a ceasefire, we've pushed down, and now, again, the market's just trading in this range. So it's kind of like if you're catching 1,500, 2,000 pips, and then you expect to turn up and do the exact same thing with the same thesis, it's not going to work long term. Like, really, we are advocates of trading slightly longer term, at least 3 to 6 months. And again, there's no there's nothing to say you can't catch intraday moves, but to maintain the same thesis and think that's going to work day in, day out without actually understanding what the dynamics of the market are and what is moving them, you know, I think long term it's a very difficult strategy. Are we still on the call? Okay, are you still there?
Yeah, sorry. I was just making a coffee. Now I'm back. Let me, thanks, Jordan. Let me just go over my chart once more. I'll record this and I'll just give an overall consensus.
Okay, yeah, that's fine. Again, it's I don't want to deter from what Sean's providing technically, but it's super important, guys, to understand what's going on fundamentally, because me and Sean have been lockstep, absolutely. With most of these things, we're having daily conversations. How are you looking at this technically? Is there anything that sort of, you know, is a counter argument to what we're looking at fundamentally? Is there anything? This is the only reason I look at fundamentals. I don't look at every single news release and say, this is going to move the market. It's contra-wise. It's the opposite. I look at fundamentals and think, is there any surprises in here? Is there anything I've not factored in? So of course, when you see, and you know, we have our opinions on what is real, that's reported in the mainstream media, but at the end of the day, the markets are going to react to that. It's the same way as when data comes out, when, you know, we've been over this many times. When you have an interest rate release that is very much priced in, let's just say the Fed come in December and they cut rates by 0.25%, 25 basis points, the market's kind of priced that in. So you are going to see that initial reaction in the first hour, the first 30 minutes, certainly the first 10 minutes. That's a very algorithmic. But we're saying, okay, is there any surprises that we've not factored in? Otherwise, we're very much sticking to the plan. The lower the time frame you're going into, guys, like you can put any trend line on there and say, okay, you can convince yourself this is what's happening in the markets. But does that really align with the narrative? Zoom out. We are advocates of zooming in and going to smaller time frames for entries and for exit positions, but you really need to just stick to the plan, stick to the idea, and unless a narrative changes where a surprise has popped up or something's come out contra-wise to what the markets were expecting, stick to the plan. There's no need to be going in there panicking, you know? So I'm gonna hand it back over to you, Sean. I think I'm trying to stop sharing my screen, whether it's, okay, cool. I've done that now. You should be able to hop back in there with yours. But again, yeah, this is, again, guys, just for the record, this is the first time we've jumped onto this function together. So, again,
yeah, absolutely.
Try to provide more structure. But also, my last point is the more you guys can interact with us, give us requests, ask questions ahead of time, then of course we can, you know, prepare. Otherwise, we will do it on the fly. So yeah, just interact with us, ask your questions ahead of time. Anything you don't understand in the stream, do reach out to us, do DM us, speak in the trading workspace, and we can refine this going forward.
Okay, thank you, Jordan. Nice words there. Can you see my trading view?
Bear with me. Yes.
All right, awesome. Okay, guys, so as we just mentioned, things to look out for. My starting elements of the week. When you have time on the weekend, just go.
I see your Discord, by the way. Sorry.
Already.
Yeah.
Oh, one sec.
So you may need to just go onto the share screen and.
Okay, one sec.
It'll actually be under your. Yeah, that's the one.
Change windows. Oh, that should be done. Can you just confirm now? Is that trading view?
Yeah, perfect.
All right, cool. As I say, guys, on the weekend, and you can go and test this against some of the instruments that you might be into. Go in and mark on. So here is quite straightforward. If you go into indicators and you go into volume profile, okay, volume profile. Sorry, 1 second. It's a pop up in a minute. Anyway, but volume profile, I took the POC out just so it more or less maps out on whichever time frame, okay, the highs and lows Very, very easy, straightforward, daily highs and daily lows. Or you can simply go onto the daily as we were before and then print in the high and low points. But I feel this is a lot more suitable visually. And you can go in and you can go up into, I don't know, an hourly, 90-minute, maybe even a 2-hourly, Monday open, closure. And as mentioned, you can just go in and you can measure. You can measure the overall metrics of pip movement. And you can see here, gold has been changing quite a lot in such a very, very short space of time. As I say, quarter on quarter this year, it continues to increase. So who knows what we're going to be doing into 2025 onward. And yeah, the interest on gold, even the cryptocurrencies, you can see Bitcoin as well. Major interest is coming through, more fluctuation, more influx in users, and at the same time, volume and liquidity will also start to skyrocket. So as Jordan mentioned, we could be going in for some lower end pushes. I know that doesn't rule out any potential buys, but I'm just looking at the overall narrative on the daily 90-minute for now. And you can clearly see over here, 1 second, let me just rewrite that, save and reload. You can clearly see over here, even some of the small time frames, such as the 10-minute maxed in, mixed in, you can see that there has been some nice entries. Mr. Dan got some beautiful entry on the long side using some Fibonacci there. And I think it was just before London into NY on the Tuesday. That was provided, and right now we're looking at, if you even just take a quick scope on gold. Sorry, it's a little bit slow on here because I don't know why, but anyway, you can clearly see there we go, the scope on gold, looking at the daily, looking at the 90-minute, going into the 30-minute, 40-minute, doesn't really matter. You can see all of the highs and lows there. If you look at Friday's low, you can see that got absolutely swiped out. And you can look at the low of Monday after that enormous move to the downside. We're still above that right now in terms of price. And the overall thesis and conjunction is if that we actually start to break through here and close, we could be in for a large move down. We could do leg 1, leg 2, third overview, leg 3. Okay. So that's what we're potentially looking at going into Thursday and Friday, and maybe clearing the month, taking out the low of last week. Sorry. So we could be in for 2570s, 80s, 2560s. So that's just a point of call. And maybe even, guys, you could maybe even see this in one session, a huge 300, 400 pip move to the downside. We've already capitalized on some nice long activity. And let's see now what the next few sessions bring. If I go into GA, GBP AUD, it's a bit of an enigma recently in the last week, 2 weeks or so. But at the moment, once more, you can I've erased it from here, but you can clearly go back. You can.
You bought them anyway? Was it the only time, maybe?
Is that you, George?
Some people said they were good and some people
Yeah, no, sit on.
Is it down? Sorry, I'm using a book. I just...
1 second. Someone's on mic. Can you turn this mic off?
Yeah, no, I've done.
That's it.
All right. So anyway, as going back in time, as I say, guys, you can go in and you can go back to the Friday close. So there's Thursday. Okay, Friday closure, Sunday open, and you can clearly go in and see. Okay, so if I just do this quickly, if I just run over this quickly, just to give you an example, and you can do this on any instrument, and you can then start to see where. Okay, so Friday, Thursday, Wednesday, Tuesday, and then the Monday. Like even here on the GA, if you look at the point of call from the top into the bottom, we had a 345 pip move. Obviously, it's only a fraction when it comes down to the gold, but as you can just go back in time. I prefer to do this on market closure, Friday, Thursday, okay, Wednesday, Tuesday, Monday. There we go. And what I did here, lastly, okay, is look at the open and look at the closure. Okay, we were more or less in a consolidation area and range and region. I've turned that off. Okay, so we got that. And then we broke, the week after, we broke below the lows, we retested the lows, and then we flushed to the downside. Overall, if we were to measure from the high and low here, That was only 151 pips. The week after, we did 345. Right now, currently, if you go from the low into the high of just 3 days, we've done 312. Let's see where we go from there. If you just go through on some of your favorite pairs, as I say, it's best to do it on the 90-minute or the hourly, and this is in conjunction with looking at some of the highs and low areas printed with these simple boxes on the volume HD sessions indicator. I've just took the rest of the jargon off. It just makes it very, very, a little bit better visually. You can start to see when the next major moves are going to be involved. So for instance, let's have a look at on gold. We've already had a weekly grid 1400. We had 1500 the prior week. Currently right now we're over 1,000 pips, and if we continue to the downside of maybe meeting the weekly open of last week there, we could maybe use that as a target potential, but also use it as an awareness scope and landscape as to not just on gold, on GA or US 30, whichever you prefer. You can use these simple timing preferences and open area and landscape for danger, and also when to have more confidence in actually holding these trades to the higher potential. As I say, now gold, it's already give us a strong struck thesis here for a short. Stop should be more or less above this region, and then we can get a nice risk reward, maybe 200, 300 pips to the downside. And I will be targeting the weekly open here for the prior week. So I'll cover this more in some webinars and also in some of the general videos that I do put forward. But as I say, guys, you can actually get ready to see how the month has gone. Week 1, week 2, week 3, week 4 of November. And you can see the overall condition landscape, and then you can get ready for the month ahead. So yeah, I'm going to cut this off. Thanks, Jord. I'm going to upload this and we'll shoot it in the group ASAP. And yeah, even here on GA, we're looking at we might have already done a 312 scoop. We did a 345 the entire week after. We could be in for some downside now. We could be in for some downside.
Yeah,
Go on.
Just to touch on that, so what I want to make clear is, if it's not already going forward, Sean very technically based, so yeah. I don't want to, there's no point in me hopping onto the lives and then just repeating what I said the week before. So what I want to do is start providing pre-recorded videos, also under the SCAP Spaces function, for you guys to understand the drivers behind these markets. And Sean can break down the technicals in much more detail than myself. So the pound, for example, if you guys go back over what we produced last week in terms of the presentation, I want to give a bit more context to that as well regarding the state of the pound, the British economy, also for the euro, the European economy. And, as I say, let's keep this motion going forward. So I will probably break this down for you guys now into some pre-recorded videos with another PDF presentation to give it some context. And in the meantime, do make sure you ask us some questions regarding what's been presented now, and we can answer all of your questions in the group.
All right, cool. I'm going to shut this off, and yeah, we'll chat in the normal group. Yeah. All right, guys. Perfect. Cool. Have a nice day, and it's still early, so just take your time. All right.